Bazaar Morning Call.
Good morning and welcome to Bazaar Morning Call. That was a 12-hour U-turn. Well, Prashant Nair, our colleague, broke that story at, 1 o'clock? And by end of day, probably 8 or 9 o'clock, the U-turn was complete from Jubilant.
Yeah, 4-hour U-turn, in fact, from the time the news was official.
Yeah, absolutely.
Good sense prevailed, I think.
Absolutely. I mean, the way in which the stocks reacted, and I suppose investors, big investors, would have even telephoned the company and said this sets such a dangerous precedent for themselves.
And I think while a lot of people would say that they won't get the premium anymore and all that, you have to give credit here because it's not the first time it had happened. A lot of promoters do ask for royalty. The fact that they listen to investors, they fear that there's going to be backlash,
and they took a call so quickly.
And they took a call so quickly, they backed out. I think that that would have soothed a lot of nerves, and as long as the basic business of the company is intact, and we know that is the case. Let us see. Perhaps we will not get the peak valuation, but the fear of derating is now, I think, out of the window. And I think that way, you have to give it to the Bhartiyas. Good thing that they decided, okay, this is not going to go down well.
I will first give it to Prashant Nair for scooping it. And then, of course, as you say, to the Bhartiya management to do a U-turn when you realize that the decision has been taken so bad.
And when I was having this discussion with Prashant also on closing, but making this point that was this a way of just trying to see, just test the waters, see if there's going to be too much damage.
That is where the corporate governance damage is. That will they look at other surreptitious ways of claiming a little more. But, well, let's see what the market tells us. For other things, I think today actually good news trumps bad news. Trump is still speaking. The State of the Union address is on. We may not see too much of an impact on anything. The markets are all... Equities globally had a very good Tuesday and early Wednesday. Signs are also very positive. For us, there is an additional positive. Normally, when you see this risk on in equities, it also pushes up crude. But today, crude has moved in the opposite direction. So we actually have a double good news from the global markets. Domestic news, well, I think there are a bunch of small numbers which have disappointed. But the big one, Tech Mahindra, came out with better than expected numbers. And of course, the Jubilant U-turn also will leave a good taste in the mouth for at least up until breakfast. So my sense is that there's enough good news in the air, but is all of this enough to pole vault over 10,980? Looks unlikely.
Well, since you're talking about good news, there's also, buying both from FIs and from DIIs that you got yesterday. There was buying in the F&O market, more than 400 crore of buying by FIs. So yes, the internals are in place. The SGX Nifty is also indicating the start will be in the green. But Anuj, you've been saying time and again that, this is a very narrow market. Even if we do cross that 11,000 hump, it'll be just because of, 3 or 4 stocks. Is it still indicative of it being a bear market beneath the surface, although the headline index may get maintained today?
Morning, Sonia. This is, there are roaring bull markets, there are roaring bear markets. There's stealth bull market, there's stealth bear market. This is a classical stealth bear market. And today is a good day to actually do this research. So the Nifty will be at 11,000 today, perhaps at some point, or will it be? But it feels like 9,000. And the reason is, more than 100 F&O stocks, 100 F&O stocks are now at levels corresponding to 9,000. And I'm not talking about Relcom and, the CG Powers, the IFCIs and GMRs of the world. I am talking about the bluest of blue chips, Ashok Leyland, Mahindra and Mahindra, ONGC, Aurobindo Pharma. Most of these stocks have been index stock at some point or are current index stocks. Motherson Sumi, Bajaj Auto, Tata Power, Eicher Motors, Cipla, ACC, Hero MotoCorp. These are stocks which are now at levels which the index was at 9,000. Okay, in the broader market, 9,000. And in the broader market, there are many such stocks. Of course, you could argue that that's the market. You would have, ultimately it all boils down to stock selection. And if you got your stocks right, you made a lot of money in this market because the index has still moved on, and you've got a lot of stocks which have done well. But why do we need bear markets? We need bear markets exactly for the issues that we are now facing. We are going through a bit of a bear market in mid caps, and that has exposed so many accidents. Like, we've seen almost one accident per week over the last few days. It started with Yes Bank, then you had DHFL, Reliance Communications, Vedanta, so many. And my sense is perhaps
SL Group.
This is not the last. There will be perhaps a couple more. So, the bear markets unearth wrongdoings. They unearth separate the men from the boys. The liquidity issue really, then plays its part, because in the bull market everything gets masked, and in the bear market you find out, what is right and what is wrong.
All I want to say is that it is the bear market in the debt markets which actually pulls out more skeletons.
Exactly. Anyway, even on the Nifty now, 7 Nifty stocks are now accounting for 50% of Nifty's weight. HDFC Bank 10.4%, Reliance 10.1%, HDFC 7.5%, Infosys 6.5%, ITC, ICICI and TCS. 7 stocks accounting for 50%. If we're talking about Bank Nifty being lopsided, even the Nifty has become very lopsided now.
Okay, I'm guessing since you have so much passion and you're driving this point home that, we are in a bear market, I'm guessing that your view is that a fresh long may not be warranted at this point, just for trade today?
If you open at 10,980, logic would suggest that the long trade will not work, because that's been the market's message, that you have repeatedly failed at 10,980. Now look, it could happen that this market just keeps going up at index level and keeps, punishing the mid caps. That's an unhealthy market. But anyway, the risk reward, my point is, perhaps will not favor a long at 10,980. First of all, I don't know if we'll open that much higher, like the SGX Nifty is indicating. There have been many instances when the SGX Nifty has got it wrong. The mid caps will remain vulnerable to big selling. I think the kind of moves that we are seeing, 15%, 20%, 25%, this is not a 1 or 2 day selling. This is something beneath the surface.
Selling,
this is something serious, and this won't go away in just one. What this will do is this will make the market very healthy, and this will really truly remove all the excesses. It's just that perhaps you would want some of that play out on an index as well, which is being supported by large caps on rotation. But the distribution phase, let's see, it can continue for some time, but the risk reward perhaps does not favor it.
But there is still a large index trade. I mean, a large part of the F&O market is trading on the Nifty.
Yes.
And today that becomes very interesting, because the way the global markets are poised and crude moving towards 62 could give some spunk. I mean, I'm really watching the 10,980.
And IT will do well once again.
Exactly.
Today.
Look at the Tech Mahindra
numbers were very strong. It was beat on all parameters. It's been a strong end. But the IT index is up 10% already this year, after having gained 25-30% last year. So it's perhaps also a bit overstretched. Okay, so let us see. But I think my bigger fear is what's happening in the broader market.
Okay, well, we have a lot of expert views coming in, so let's kickstart the show on that note and tell you what our wise experts have to say as we head into trade this morning. Ridhim Desai of Morgan Stanley says the FPI outflows in Q4 FY18 were slower than the market's moves, which resulted in a rise in FPI stakes, contrary to the market's belief that they are falling. He expects the breadth of the ownership to pick up from current levels. During the quarter, FPIs added positions in 4 sectors, with most positions in consumer discretionary and financial names.
Okay, some money market views from Pramit Brahmabhat of Veracity. Pramit says a weaker rupee will have a southward move, and 71.50 can be considered an immediate resistance. He expects the trading range for spot USD INR to be 71.50 to 72. Today, a little bit of strength in the rupee because of crude.
And on the bonds, Dhaval Dalal of Edelweiss says all eyes are on the MPC tomorrow and their views on expansionary budget, demand-supply dynamics and the guidance on the headline CPI in the near term. Bond market participants believe that the window to reduce rates may be closing soon. He expects the 10-year benchmark bond yield to decline in case of a dovish MPC.
Okay, let's go across to Nigel then for the world view.
Well, another strong close on Wall Street. All the 3 indices ended with good gains. The Dow, in fact, was up close to around 170 points. There was a few select stocks that did very, very well. And that's what drove up the Dow. You had Boeing that did well. Apple as well was higher in yesterday's trading session. And Intel as well did put on close to around 1% to around 2% odd. If you're looking at a couple of other data points, well, the market was bracing itself for Trump's State of the Union address. That was one point. The second factor was the earnings. And the dollar did strengthen ahead of that speech. So that is holding about the 96 odd mark. Brent crude prices, though, they slipped $1 from the top. The factory data was less impressive than what was expected, and that's why we did see both NYMEX as well as Brent crude prices did see a bit of a cut. The European markets, though, they had a roaring rally yesterday. A couple of sectors that did well. Oil and gas, in fact, was up and about. BP came out with a set of numbers. That stock was up close to around 2% odd, and the entire sector was higher in yesterday's trading session. Though the retail sales, they fell in the month of December, but that was more or less on expected lines. Asian markets today, most of them are shut, but the SGX Nifty is indicating that we're likely to start off in the green Whether or not that happens, for the time being, it's indicating a half a century. Back to you guys.
Okay, thanks a lot for that. I just want to mention some news coming in on the Class 8 truck orders, the North America orders. They're quite disappointing, actually. Second month in a row, 15,800 year-on-year. That's a fall of 68% year-on-year and 26% month-on-month. Remember, the last 2 months, in December, it was 21,000 orders. In November, it was 27,000 orders. And in October, it was 43,000 orders. So it's come down substantially from 43,000 in October all the way down to 15,800 in Jan. So this is quite disappointing. Third month in a row that the numbers are falling.
It's so bloody confusing. Just last week they tell you we created a record 315,000 jobs, and the next week they come and say trucks are not selling. They don't seem to gel. They don't seem to be speaking about the same economy. But okay, to put exactly all this into place, so we have someone who best understands global markets, or especially the US market. Also, an important event that happened over the last 24 hours is the meeting between Fed Chairman Jerome Powell and Donald Trump. White House reports say that the 90-minute meeting was fruitful and the two parties did not discuss monetary policy expectations. Remember, in the past, Donald Trump has been pretty vocal of criticizing the rise in interest rates. In any case, the best person who can give you a spin on all this is El Erian, the alliance chief.
This happened this week and not last week, because had it happened before the pivot, we would be having a completely different conversation. I always feel it's important for two sides to hear each other, and it reduces, doesn't eliminate, but reduces the probability of misunderstandings in the future. So I think, net, this is neutral to slightly favorable to the market, but it's not a big deal. What the Fed did is it reduced the left tail. That's what it did. It didn't guarantee the right tail, everything going well, but it reduced the left tail, which means the expected return goes up, expected volatility comes down, played on expectations that liquidity would be accommodated if needed, and therefore you can be more comfortable going back to the old view that, look at dips as perhaps buying opportunities. So that's really important. Now, what's important is the right tail depends on things that the Fed does not control. It depends mainly on growth in Europe and China. And we got some pretty concerning PMI numbers again today, out of Italy, out of the UK. So it's important to understand what the Fed does and what the Fed doesn't do.
All right. Well, on that note, let's do one thing. Let's take a quick break. On the other side of the break, we'll drill it down to the specific stocks, Jubilant Foodworks, Tech Mahindra, a whole host of stocks on our radar. We'll be back in just moments from now.